What's up, guys? So today's a Wednesday, and I'm putting out this video midweek because we are at a very precarious situation here with the market. And so I figured this would be a good time to actually just do a midweek update and kind of let you know what I'm thinking so that you yourself can be prepared with the knowledge that I'm about to share. Now, if you know, the last episode I put out on Sunday before the week began was that I said the top was in, right? And that the stocks will continue to go down from here despite good news. And that's the key, right? That's how you know when there's a topping process is when there's good news, but the markets still don't rocket to the moon. And as I said in my last episode, this is something that Tom DeMark, popularized, is that stocks top on good news and stocks bottom on bad news. And while that sounds counterintuitive, that's kind of what is going on right now. When you see these things, you read the tea leaves, you kind of know that yes, we're kind of starting the topping process of a multi-decade long bull secular market. Now, why is today so important? Well, I just want to say, like, overnight, we've seen some crazy moves out in Asia. Now, the Nikkei, which is the stock market in Japan, dropped almost 5%. Now, 5% is quite a big drop to happen, and it did recover some, but that was quite a big, reversal because Japan, if you know, the Nikkei had been skyrocketing, going like 18% increase in a single month. 18% for an entire stock market in a single month is crazy moves, right? And that kind of ended with this huge drop in the Nikkei overnight. But it wasn't just the Nikkei, right? It was also the Korean stock exchange, which had an even crazier move up, going up 20% in a month. And that actually gapped down and just completely crashed, approaching even a 10% decline, where they actually had to halt the stock market in Korea, right? They actually halted before they reopened because it triggered the circuit breakers. And that's how, this is kind of a crazy move up that just ended with a bang. And so, these things going on, you can't just ignore, right? Even though it's not the American stock exchange. Now, if you look a little bit more deeply into, let's say, what's going on in Asia, you'll see that SoftBank just kind of wiped out over $32 billion in market cap. Now, SoftBank had been going up like crazy as well. But basically, because of AI stock valuation jitters, which is something we've been talking about, that everybody's been talking about, and a lot of people say just because everybody's talking about it, it can't happen. If everybody's talking about AI being in a bubble, it can't be in a bubble. If everybody's talking about there's going to be a market crash, the crash can't happen. That's a myth, right? Because if you actually look back in history, a lot of people talk about it, and it did happen. So you can't just make these statements like that, because if you actually do the research, you'll see that many people were talking about the crash, let's say in 2007, 2008, and the crash happened. Even books were written about it, right? Nassim Taleb wrote the Black Swan book, which now everybody knows what it's a household term, Black Swan, but that book came out months before the crash. And that had millions of people who bought it. So people were talking about it. It wasn't like an unknown, nobody was talking about the crash, and that's how the crash happened. Everybody was, not everybody, but a lot of people are talking about it, and the crash still happened. So just got to keep yourself in check when you hear these, like, well, if everybody's thinking the same thing, then it can't happen type of reasoning, because if you actually do your research, you'll understand that that's not necessarily the case. Now, if you look at what happened to SoftBank. I mean, they had dropped already quite a bit the previous session, and then they just gapped down and dropped even more, going down almost in 2 days over 22%, right? And this is SoftBank. And there's jitters on AI valuation driving this type of a move. And we're seeing this out over in Asia. Now, as you know, I brought this up at the last episode. The way the dot-com bubble topped the 2000 was we had 3 gap ups in a row that resulted in over a 4.5% increase that led to the top, and then we kind of just went down afterwards. And what happened last week was we also saw 3 gap up in a row with over 4.5% increase. And now we are coming down. And actually, we have extended this because Monday was a down session. And today, which is why I made this video, is a critical session. Because if we go down further, we will solidify the top that we just put in, which is what I speculated we did last week. Now, my friend over on X, Sir Finance-a-Lot, He's a buddy of Sir Mix-a-Lot, I guess. Shout out if you're watching this episode, my man. Now, what he was saying is, if we look back at what happened in Feb 21, we had a situation where we kind of went down, right, to a moving average, and then we gapped. When we gapped underneath that is when the bad things started. And that started that whole 21 bear market where we went down quite a bit. And what he's pointing out over here is that we're at a precariously similar situation where we're down at this moving average again. So if we gap down a little bit in this session and continue down, we're looking at probably a bad situation as well. And so that's another reason why I wanted to just share this, because it is kind of important. We're at the precipice here. We are at a very important junction. That doesn't mean 100% we're definitely going to do this, but it's something that you need to take a look at as the session begins. As you start going down, we could be in for some very tough time. Now, if we start the session go up, then okay, this is invalidated, and we go up, it's possible, right? Anything is possible. Nobody has a crystal ball. If anybody did, we'd all be billionaires and not be making YouTube videos. I certainly don't have one, but it's a game of probabilities. And if you look at the situation, it's looking like if it does do this, the chances of there being a big drawdown in the very near future goes up by quite a bit. And that's something you need to keep your eyes peeled on, because, you know, if we zoom into the hourly on the S&P futures, and this purple line here is a 200 exponential moving average, you can see like the moment we broke it, it's then became resistance, right? What was one support becomes resistance. Well, it was resistance. Got battened down. Then we finally broke it to the upside over here and became support. It became support. Well, we just broke it again, right? We just broke it to the downside. Now this is as of yesterday. So now we went even further. And you guessed it, it's going to act like resistance. And so even if we do bounce up here, my point here is if we do bounce up to the moving average, it's likely going to be a capper and a resistance for the next leg down. And that's why I bring up the hourly over, because you got to be aware of these things when there's a shift in the over-under of imported moving averages. Now, I bring up NVIDIA because I was just having fun with the folks over in our Discord server. And, you know, join the Discord. There's a lot of chatter going on, because whenever things start getting, you know, interesting, that's when a lot of people start talking, and there's a lot of talking going on right now. But I brought up Kermit the Frog here because this looks like Kermit the Frog with NVIDIA. And I said actually earlier that it looks like we could be doing a double top. We were around here back then. And I said, look, there's top one, top two, there's a neckline. You got to watch out. And lo and behold, we did get rejected around the previous top. And then we kind of came down to the neckline, and now we've broken through the neckline. Do we back test the neckline and go down? That's what I'm looking for today, and something you should look at too. Now, if we go back and test the neckline again and get rejected, that would be a very bearish signal for NVIDIA, and chances are we're going to go all the way back down over here before we find some support through that air pocket. So keep your eyes out on NVIDIA and what happens over there. The other thing I've been telling folks on the Discord server is watch the dollar, because the dollar, ever since Powell did the 25 BPS rate cut, has been doing nothing but skyrocket, and it continues to skyrocket, right? And this is what I've been telling, like, no, people thinking like, hey, you know, cut dollar, or rather cut interest rates, that means Fed's printing, dollar's going to get weaker, dollar going to go down. No bueno. That's not what's happening. What I thought was going to happen, that's not what's happening, right? It's just going up, up, up. And let me tell you why that's a little bit tricky here, because when the dollar goes up, right, but at the same time, we have a rise with the US dollar, Japanese yen. Look, we're almost at 160 here, right? We're almost at 160 here. We're at 153. If this thing goes, Japanese intervention by the central bank, they've been intervening almost daily, right? We hit 160, look out, because that's the last time we had the yen carry trade unwind on us. So you got to be very careful. We got a lot of things that could just trigger a massive downturn here and a liquidation sell-off. And there are people who are saying like, no, this is it. We're going to bounce from here. You know, this was, people are saying like, we're going to bounce here because we had the panic sell-off the other couple of days. And I'm saying, no, there's no panic sell-off, because the VIX never, this was the panic sell-off. And yes, we did bounce after that happened, right? A few Fridays ago. That's the panic sell-off. This is not a panic sell-off, guys. This is a controlled, elevated, you know, pricing for downturn, right? It's insurance against downturn that's driving this. This is not panic would be above 30, right? And I expect us. So the VIX is telling you we did not have a panic sell-off. That means we're probably not going to really have a real meaningful bounce until we get that initial panic sell-off. A panic sell-off would be a VIX into the 30s. And that would mean the stocks would really kind of crash, right? Like serious, like what the Nikkei did or the Kospi did, like 3, 4, 5% drops in a row every day for a few days. Then you have a washout low where on high volume and everybody panics out. That's when you'll get an interim bottom. We'll try to do some kind of a, all is normal again, run up back to, maybe even back to the all-time highs, perhaps, right? I don't think so, but anything's possible before the next leg goes down. And that one's going to be a really big downturn, right? Much bigger than the initial first leg down that I believe we're currently in the middle of and building out. So my message to you in the short video midweek is you got to look out for what happens today. Today is key. We go down big today. That is telling you big drawdown days are coming up. We will have the panic sell. VIX going to spike up, and you got to be prepared for that, for such a situation. Now, I don't give investment or trading advice. This is just what I think and how I'm preparing for how I'm going to tackle the next couple of days here in the week. And if we don't and we bounce off it, well, that's good news, right? To the longs, at least. That means, we've averted that for now. And now we got to see how the price action plays out and how it digests the move we just made in the past week. So having said that, I hope you all have fun in today's trading session. Stay safe out there. Don't get killed by leverage. And I'll see you in the weekend episode. Peace out.